What's up everyone, it's Karthik with Moneyvest. So I've got a very important update for all of you. So we got lots to unpack in this video because of the rotation outside of technology over to other parts of the market. I did a video earlier today going over how there is a very clear sign the market's giving us that investors are currently unaware of, that technology stocks are underperforming. They have indeed been underperforming since July 10th. This is not something new. This is not something that's been happening over the last couple of days, but this has been happening and it's been flying under the radar, which is exactly why I wanted to address it in this video. So make sure that you do check it out because I go over a lot of detailed analysis in that video as well. And this right here is the market's performance with S&P 500 down about 32 basis points. NASDAQ down over 85 basis points and the Dow Jones pushing up over 16 basis points. So the Dow outperforming the S&P and the NASDAQ. NASDAQ, of course, being more tech heavy, significantly underperforming and down almost 1%. At one point, it was down over 1% with a lot of individual stocks and Magnificent 7 companies selling off. So you got lots of data to break down for all of you in this video. Make sure that you drop a like and subscribe to the channel if you haven't already. And also share this video with your friends, family, other traders, investors, Telegram groups, WhatsApp channels, Discord, everywhere, so that we can have more people and more lively and engaged discussions on the channel. I would really appreciate that. And link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the Discord and Patreon benefits with that 16% annual discount also available until the end of this month. So one more week left. So I was down a little bit over $5,400, of course, amid this entire sell-off in technology. And we talked about this quite literally just a few hours ago. And now you have all financial media platforms. The headlines are Dow in record close as cyclical stocks shine amid a tech rotation. And once again, the Dow closes at record high while technology stocks drag down the S&P 500 and NASDAQ. And again, this is not something that we are witnessing for the first time. This has been happening since July 10th. And I specifically mentioned in my video from earlier today that if technology does not gain leadership back, it is going to be very difficult for S&P 500 to actually move higher. I specifically said that word for word. And guess what? It was actually mentioned in one of the articles that I was reading earlier that essentially said that traders also appear to be rotating out of technology into other areas of the market, literally word for word what I mentioned. And the S&P 500 energy sector was up more than 1% while tech fell 1%. NVDA was down a little bit over 2.3%. And this right here from Bard analyst Ross Mayfield said, and I quote, "I think there's a little angst in the technology sector about the upcoming NVIDIA earnings. The market is in a pretty healthy place, but it's really hard to make a big advance higher if tech is a laggard. It's just too big of a weight in the index, and right now it is acting like a laggard." It's not just acting like one, Ross, it is actually one of the underperformers in the S&P 500. And Powell did not indicate when or by how much interest rates would be potentially lowered. Traders remain unanimous in their forecast for a rate cut at the Federal Reserve September policy. And this right here was from CFRA Research Investment Strategist Sam Stovall. He says, and I quote, "We think they'll only do 25 basis points in September, November, and December, because they want the market to know that they are not behind the curve, but at the same time, they want to ensure that they are going to go too quickly into cutting mode." And I think I somewhat agree with this because, once again, I mentioned this in one of my previous videos that I think 100 basis points is a little bit too optimistic from the market, and I would be in the camp of 50 to 75 basis points worth of cuts in 2024, and that's exactly what Mohammed El Arain also mentioned. And that is only if there's a big if. There is no severe signs of recessions, meaning unemployment doesn't accelerate higher, aggressively. And only then I actually see 100 basis points or higher in terms of rate cuts from the Federal Reserve. In other words, more rate cuts and a lot more aggressive nature of those rate cuts if there is a recession. If there's no recession, if the economy continues to plug along at these decent 2.5% growth rates, unemployment stays relatively slow at 4.3, 4.5 or under 5%, then I wouldn't be surprised if we only see a 50 or 75 basis point rate cut. Okay, so now that we have the monetary policy out of the picture, just want to discuss the technology rotation. This right here is a brand new bird's eye view that I've created for all of you. It's going to be actually quite interesting. There's a lot on this slide, and I know that it only looks like green and red cells, but it is actually telling us a lot of information that I want to break down, and I'll explain what this exactly is. But before we even get there, I really want to help you understand what exactly is going on with technology. So what I have over here is simply XLK divided by XLU. So this is technology sector divided by the utilities sector. And we've got pretty telling data. And the reason for that is because this is the significant underperformance is what we're witnessing for technology relative to utilities. Because in my previous video, I mentioned how XLU is trading at an all-time high. If you take a look, we pretty much hit a new all-time high at just under $76 a share. And you can actually do this comparison with a few other sectors like XLP, for example, Staples, also pushing to new all-time highs. I mean, what a candle, up over 70 basis points, significant outperformance, trading up to $82.42. So again, new all-time high. So if you come over to this is the XLK's underperformance. In other words, technology sector's underperformance relative to utilities, or you can also do the same exercise with Staples. And guess where the last time we saw that underperformance take place? This was back in 2022. Prior to that, October of 2018, also a bear market for the S&P 500. If you scroll back a little bit further, February of 2016, scroll back a little bit further, this right here was during the 2000, pretty much at the beginning of 2000 or 2001, that was the dot-com bubble bursting. And we also have the 2007, 2008 over here, significant underperformance in technology relative to utilities. Now, while this chart overall since then has been flourishing, or it's been going higher, that simply does suggest and mean that technology has outperformed utilities. But what I'm really trying to help you understand is that the instances where it doesn't. Over the long term, I think we can be on the same page and understand that technology is going to be a leader. It's going to regain that dominant position in the S&P 500. It's going to continue to lead. But the idea is not about the long term right now. It is really trying to understand the short term and what the market is telling us. Because these defensive positionings in the market and the shifts that happen can tell us a lot about what the market's expectations are for the near to medium term. Long term, we can still expect this trend to continue. I think technology, with the advances and the innovation in semis and all the other aspects of digital transformation, is still going to do well. And this chart will most likely look something like this in the future, where the outperformance continues. But it's just a short-term trend that is a little bit more on the concerning side. And one more thing that I want to mention is if you come over to XLK and then divide that by the Dow Jones, which is DJI, and you hit enter, and if you come over to the monthly chart, this is, in my opinion, even more concerning, because this was the biggest monthly underperformance in technology relative to the Dow. This was a 7% sell-off. In other words, the technology sector underperformed the Dow Jones by over 7%, something we haven't seen since the last time we actually saw that was, unfortunately, March of 2008. That was just a few months before the markets absolutely just got demolished. This right here was January of 2008. Actually, January of 2008 is the last time we saw that. And this right here was also the significant underperformance. And of course, we've got the tech bubble bursting, and all of that was underperformance in technology relative to the Dow Jones. So it's been well over 16 years since we've seen on a monthly basis an underperformance from technology relative to the Dow as big as this, because we were down a little bit over 7% for this particular index in July. I've also got one more spreadsheet, as you already know. So if you come take a look at the S&P 500, so the entire Magnificent 7 stocks lost a little bit over $140 billion today. Because NVIDIA was down over 2.2%, so it lost over $71 billion. This right here is going to be Microsoft, which lost a little bit over $24 billion. Then we had another $22 billion being lost by Tesla. And then, of course, we had a few more stocks like Meta Platforms and Amazon down anywhere from 1 to 2%. And we were down $16 billion respectively. The only two companies that were up were Apple and Google. Google was up the most, 6.1 billion. Apple won $5.1 billion, but I think after hours it was down after the company announced its September 9th date for the new launch, and also that Luca Maestra, the CFO, is going to be transitioning into a different role for the company. So it was slightly down about 60 basis points after hours, but collectively $141 billion loss. And you know what's even more crazy? The S&P 500 had a $150 billion loss. Like, this is what I'm talking about, guys. Like, if you literally just take this number, 141 billion, and you just divide it by this, we are looking at a percentage at 94%. 94% of today's losses can be attributed to Magnificent 7 for S&P 500. So that's why if the Mag 7 does not lead the S&P doesn't go anywhere. If Mag 7 sells off, S&P will most likely sell off because the weight of the Magnificent 7 sell-off, it's quite a tongue twister, is far greater than what other companies, the other 493 companies, can ever even imagine to lift. I mean, for these companies that are not even, 205, like we're talking companies that are in the average of about $200 to $300 billion range. You know what? We can actually do that calculation right now. So if you were to simply just do this by market cap, so now we have the biggest companies here. So you got Apple, NVIDIA, Microsoft. These are the most updated market caps here. And let's just quickly analyze the 490 companies. So we're going to ignore the top 10. So we're going to ignore, we can actually ignore the top 12, right? So we can ignore, Broadcom. I don't know why there's JP Morgan is not showing up here. There seems to be a small discrepancy between 12 and 11. Okay, so they're not really ordered here by number. Anyway, so we can ignore the top 10 basically. These are the top 10. We got Apple, NVIDIA, Microsoft, Google, Amazon, Meta, Berkshire Hathaway, Eli Lilly, Broadcom, and Tesla. And then let's take a look at the market cap for the other 490. So other 490 companies, the average comes out to $64 billion. 64 billion. Can you believe that? 64 billion is the average, with a max cap of about $28.6 billion is going to be the lowest number, and the maximum is $623 billion, which is JP Morgan, but average is $64 billion. So to put things in perspective, you've got the average at $64 billion. And if you take a look at let's say the next few companies, let's say that you want to look at the next, let's look at the next 100 companies and what's their market cap. So this is what we're going to do. We're going to come down here, and the average is still $190 billion, guys. $190 billion. The average you can see over here, down here. So what I'm trying to say here is, if you exclude for Magnificent 7 and you look at the next 490 companies, the average market cap is $69 billion. If you look at the next 100 biggest companies, the average is still $190 billion. These companies, the Magnificent 7, they add $190 billion in one single day sometimes a couple $100 billion. They add complete companies in a day, sometimes when we go up 2 to 3%. That's how big these companies are, because I don't think people realize how much of an influence Magnificent 7 has on the S&P 500. So 94% of today's losses were coming from these companies. So coming back to this chart, and what this chart is essentially telling us is very simple. It's telling us the short-term and medium-term and the long-term trend for these ETFs, for all of these asset classes and ETFs. So when you see something in red, you've got the 5 SMA, you've got the 9 SMA, the 21 SMA, 50 SMA, 100 SMA, and 200 SMA. So it's giving us an overall idea of what the trend may look like for that particular ETF. So for example, S&P 500, it's green across the board, meaning that it's on a very, very solid uptrend. Long-term, short-term, medium-term, everything moving upwards in a very nice, healthy fashion. Take a look at the NASDAQ. As you would imagine, the short-term is still under a lot of uncertainty because it's red, right? It's below its 5 SMA. That means the short-term trend is still uncertain. And if you look at the NDX 100, right? NASDAQ 100, not the NASDAQ composite, but the NASDAQ 100, it's not only trading below the 5 SMA, but it's also trading below the 9 SMA. So on a 9-day simple moving average prices basis, it is lower on both accounts. So what is that telling us? If S&P 500 is trading at near all-time highs with 5 SMA, 9 SMA, 21 SMA, all that stuff, and NASDAQ 100 is not, that clearly shows significant underperformance, right? Tech is acting as a huge laggard. It's not really gaining all that momentum. Gold also across the board, very, very green. TLT below its 5 SMA. The dollar index is in a full-blown sell mode. So it's down across all metrics here, below the 200, 150, 21 SMA, 9 SMA, all that stuff. And XLK, once again, if you come over to technology, so not only 5, 9, but 21 SMA as well. That's the underperformance over the last 3 weeks and what we witnessed. Energy is quite unusual. Short term seems to be strong. Long term, it's still above the 200 SMA, but it's been so back and forth that it's actually trading below its 100 simple moving average. So over time, you'll see a lot of these grids actually turn into red or back to green. So it's going to give us a bit of an idea on where really money is rotating into, from where is it coming out and where is it rotating into, because we can look at these things from a chart perspective, but this is simply in a grid which I think is also very, very useful. Now, coming over to the Moneyvest dashboard, we are trading at just under 4 on the Moneyvest index here. 77% of stocks trading above their 50 SMA, and also, quite surprisingly, exactly the same number of stocks trading above their 200 SMA. And we have, of course, almost 90% of stocks trading above their 20 SMA. We've got the VIX trading at 16, so we're in the 40th percentile with volatility, and M1, M2 contango at 12.5%, so very stable, very nice. Put call ratio back below 1, and we've got 23 times price earnings multiple, 90th percentile, with the Mag 7 concentration trading at just over 31%, with a drawdown of just over 1% from all-time highs at the moment for the S&P 500. So again, we've got a little bit of red and yellowish over here. So that just continues to show that the markets are favorable, not that favorable, excuse me, from a risk reward standpoint. And that is something that we have to keep in mind. So GDP numbers due later today, as well as the PCE numbers, so personal consumption expenditure. Apple announcing its iPhone event for September 9th. Apple to also replace CFO Luca Maestri on January 1st. And this right here was the entire heat map. Tesla down a little bit over 3%, NVIDIA down 2.2%. Those puts expire on Friday. Wednesday is when the earnings come out, so we'll take a look at what those earnings are looking like. I don't know, man. I'm starting to feel a little bit more suspicious about NVIDIA's move after hours on earnings. Let me know in the comment section down below, and what are you expecting? And again, you can kind of see how technology has been lagging over the last 1 week. So this right here, consumer cyclicals also lagging a little bit, and comm services also down 25 basis points. And if you come over to the half year performance, that's why I mentioned that this has been going on for some time. You'll notice that utility is actually a leader in the market right now, up 22%. Slowly and steadily, it's kind of making its way higher. Nobody's been paying attention, I feel like. Communication services up a little bit over 13%, real estate up 12.5%, and then comes technology, which is up over 12.6% on a 6-month basis. Sugar prices higher, crude oil also pushing up, cocoa prices, cattle, coffee, volatility, and then orange juice with the big loser here, down over 4%. And lumber prices also selling off. Bitcoin's back over 63,000, Ether just under 2,700 as well. So there we have it. There's been, on a relative term basis, definitely a lot of outperformance from utilities and defensive sectors like staples and energy. And that, again, has been one of the early signs of a market's positioning turning more to a defensive state. I think it's all because of a anticipated or a potential recession, because markets are very forward looking, as I mentioned in my previous video, and if they are positioning themselves to be more defensive going into utilities are actually very recession proof, because everybody needs to pay their utility bill, because in order to live you need electricity, water, all those basic necessities are still required even if you are in a recession. But discretionary spending, technology, hardware, that actually starts to pull back. And again, you've also got the growth aspect to it, where if there is a recession, just growth stocks tend not to do super well in that environment. It's mostly a time where you want to be in value or something more utilities. But I really don't want to make those tactical calls just based on something that I don't know if it's even going to happen. Like recession wise, nobody really knows if that's even going to take place. So I'm much rather stay invested long term on technology, with other strategies also employing with selling calls and again gathering more cash to buy the potential opportunities that come our way if volatility were to spike again, if the markets were to start rolling over once again. So speaking of, VIX here basically flat, up almost 2%, but again the levels we're watching is 15. On the higher side, we're watching 18 to 20 to as much as 23, all the way up to as much as 36 on the VIX. Crude oil starting to move back higher. So we're starting to see a little bit of a move back higher. I think it was one of the countries, I forgot what the name was, but I think they cut some output. May have been Lebanon or Yemen. Let's see. I think it's one of those countries. I forgot the exact name here, but I did read something about it earlier when I was traveling. So crude oil, gasoline prices Monday rallied sharply to 1 week highs. Oil prices moved higher in concerns that an escalation of conflict in the Middle East. And then we also got Lebanon to take out hundreds of missiles launchers, and crude oil prices saw support after Libya's eastern government called for a halt to all crude oil production. So not Lebanon, but Libya cutting a little bit of that production or output in oil over some political conflict on the country's central bank and oil revenues. So again, there's always going to be something happening in the Middle East. I actually have my flight next week. Hopefully that's not going to be a problem, because we're actually flying over Iran. But support level is going to stay put at $73, $72, and resistance is going to be all up to $80, $81 a share for crude oil, as we already discussed, and a lot of consolidation sideways in between that range. I also want to mention the dollar index, which continues to sell off. So we are seeing a pretty significant, decent selling pressure on the dollar index here, coming down to low 100s again. And right now trading at a support, but if it does end up, let's say, breaking down further, I would be watching 99.53 as the next level of support for the dollar index, aligned with that level that we've seen from back in July 2023 as well. Now coming over to the markets, first things first, let's talk a little bit about the S&P 500. So getting rejected again here. So this right here was a level that we were talking about, in our previous market updates. A lot of consolidation sideways for the last 3 days. S&P has been getting rejected here at 56.40. Support level is going to stay put here inside this green rectangle for S&P 500. And right now we're just consolidating sideways. So I wouldn't be surprised if we do end up, let's see, seeing a little bit of a pullback in a support validation here at 55.65 before making that next leg up higher. But either way, the bulls and the bears, we got a huge battle and a big test for the market, whether this is indeed a double top and whether we see some pullback or not. And I think a lot of that is going to really just depend on whether technology holds up or not, whether Magnificent 7 pushes up or not. That's what's really going to dictate where S&P 500 ends up going. Speaking of the devil and the NASDAQ here, consolidating sideways and starting to roll over, support level is going to stay put right over here. We have actually been analyzing QQQs, which was down a little bit over 97 basis points after hours, also selling off. It looks like we're starting to break down a little bit of that support. I'm going to give it one more day to see if the bulls can step in. If not, then I think it's going to be pretty obvious that we're going to start to break down a little bit further, and the next support is going to be down at 454 for the NASDAQ as well, unfortunately. Talking a little bit about Apple here, and Apple was consolidating sideways on the day, starting to roll over a little bit. Again, a lot of consolidation in that range. That's the potential bull flag formation for Apple, but at the same time, it is also rounding up on its RSI and MACD. So on the 4-hour chart, you'll notice that we are a little bit more overextended, as Apple has seen a very nice recovery from its Monday, August 5th lows. It's pushed up over 13.5%. Support level is going to step down to 207, resistance all the way up to 236 for Apple. Talking a little bit about Amazon, and Amazon here also consolidating sideways. Support level is going to stay put down here at close to 174, all the way down to 166 for Amazon. If it does end up, let's say, pushing higher, resistance is going to be all the way up to $189 a share right now. But I wouldn't be surprised to see it back down in the 173, 172 range. And then, of course, it's all going to depend on NVIDIA's earnings and what their guidance looks like. That I think is really what's going to dictate. It's kind of interesting because NVIDIA, in a way, is going to affect Magnificent 7, which is then, in a way, going to affect S&P 500 and the NASDAQ, which is then, in turn, is going to affect pretty much everything, right? Even Fed policy to some extent, because even if Jerome Powell tells you they're not looking at the market, they most certainly are. Because markets are one of the best measures of trying to understand what is the market pricing in, because it's in real time and it's also very, very forward looking, as opposed to some of the other indicators that can be very lagging. So support level for Amazon is going to stay put at 173. Now coming over to NVIDIA, the big star of this week, a lot of consolidation, down over 2.2%. I still do have plenty of margin. $108 is still a little bit over 14% away. And of course, $105 is going to be a little bit over 16% away. So if earnings result in a 17% sell-off, only then those puts are going to expire in the money. And I will get assigned shares at 100 shares, close to 700, 600 shares of NVIDIA in and around those prices. If it doesn't, then of course I get to keep the entire premium. I'll keep you guys updated. It's going to get very exciting Wednesday, Thursday, Friday. For NVIDIA and for myself. But support level is going to stay put at $96 with my fair value, of course, a little bit lower. Resistance all the way up to as much as 140. And again, we'll find out here in a couple days how NVIDIA ends up trading post earnings. A lot of consolidation sideways here at the moment. Talking about advanced micro devices and AMD on the day here. Also selling off, down a little bit over 3.2%. Coming back down inside this green rectangle. That's the area of support that we're watching. And we also did officially make a new lower high for advanced micro devices. Now the question then becomes, are we going to make a new lower low, or are we going to validate that support here and then of course start to move back higher? That's the real question for advanced micro devices. PayPal outperformed a little bit. What's going on? PayPal $72 actually did much better than the NASDAQ and a lot of Magnificent 7 companies, I would say. 47 basis points higher, $72 is where it's at. Very strong support here. However, very overbought at the same time. You got an RSI trading well over 72. So is the MACD. So is the L3 banker oscillator. So I'd be very careful. Would not be surprising one bit if it does end up, let's say, pulling back. And the next resistance and target is going to be closer to $76, $77 for PayPal. Visa, on the other hand, starting to really try to break out of this lower high here. So this right here is going to be that level to keep in mind. And of course, a breakout above this is going to put us on the map to getting up to over 272 to as much as 282. Got a very strong support sitting right here at 266 for Visa. Talking a little bit about Netflix, and actually before that we get to Netflix, let's go over to Enphase here. And Enphase, a very significant candle. It was much higher at 130, then sold right back down to trade as low as $121. So very, very strong support level here for Enphase, down to as low as low 100s, sub $100, and resistance target stays put at 138 for Enphase moving forward. A little bit about Costco. Now, Costco actually outperformed as well. So if you come over to this sheet, and I actually forgot to mention this, but if you come over to this descending chart, you've got $11.1 billion ExxonMobil. So ExxonMobil was the company today that added the most market cap with over $11 billion being added. Then we had Google, and you can kind of already see the difference, right? ExxonMobil had to go up over 2% to add over $11 billion, right? Google, only 30 basis points to add $6 billion. So had it gone up 60 basis points, so less than half of what Exxon did, it would have already surpassed in terms of its market cap gain, and it would have been gained over $12 billion, which is more than Exxon's $11 billion gain, with more than twice as much gain on a percentage basis, right? So that's what I'm talking about, where the 490 companies, the other 490 companies, have to do twice, if not 3 times more work in order to just make up for what the Magnificent Seven lost on the S&P 500. And it's very difficult for them to do that. But the focus is the third winner on the day, adding almost $5.9 billion was Costco. I think somebody mentioned this in the comments as well. And that's one of the reasons why Costco is doing much better, is because it is seen as a recession-proof value stock, although it trades at a very expensive valuation. But hey, people want to buy it at $892. They'll continue to buy it at even $892 or $900. So resistance is going to be all up to $894 here. Support level $872 for Costco moving forward. And again, just a few more companies left, and starting with the Meta Platforms, trading at near all-time highs, but of course coming down 1.3% as we discussed earlier. Not a surprising move. RSI, MACD, and L3 banker oscillator, everything's starting to roll over here, and we've got resistance and that area of supply for Meta sitting roughly at around $540. Yep, so $540, and support level down as low as $458 down to $420 for Meta. Talking a little bit about Google and Microsoft, still lacking behind. Google here barely up from its from its August 5th Monday lows. It is up a whopping 7%. That is incredible. And resistance going to stay put all the way up to $176 with a support level staying here inside this green rectangle. And finally, we come over to Microsoft, starting to roll over a little bit, and support level is going to stay put down here, $401. I don't know about you guys, this actually starting to look a lot like a Head and Shoulders, with a neckline sitting roughly at $400. So again, we'll find out if it actually ends up breaking down below this neckline or not. And finally, we come over to Netflix, and Netflix also starting to come down from its resistance of $701. Again, not a surprise considering how overbought and overextended this entire move was. So hope you all enjoyed this video and a complete update on the markets. We sure had a lot to unpack and discuss in this video. Make sure that you drop a like and subscribe to the channel, and let me know your thoughts down in the comment section below. And as always, happy investing. I'll see you all in the next video.